Hi there, traders. This is Brad Goodwood with today's trading action. All right, now let's just get things kicked off a little bit earlier than usual. Not a lot going on, right? We have got the Fed this week. Now, no change of rates expected from the Fed or the Bank of England, right? So don't think they are massive opportunities to trade a change of interest rates because they are sort of fully factored in. No change. The Fed like 99% and the Bank of England 88%. So it's really going to come down to what they're talking about, and what we're looking for is, or the market is at this stage, really looking to hear something from the Fed about what they interpret will Trump's tariffs will have, what implications they will have. Now, that's their opinion, but they are the central bank, so the market will go with that, right? So if they're expecting a slowdown, well, we better listen. It goes towards a weaker dollar, and that's what I'm sort of seeing across the board at the moment. Right now, if I just give you a look at the currencies, just have a look after Monday, right? Not a lot of news out, not a lot of data. You see the dollar Swiss just sort of angling down here. You've got euro, like it wants to go up, but just can't do it. The sterling sort of managed to get above that resistance line, and you saw a little pop here on the top side, Aussie, Kiwi, and CAD, right? Now, this is where you just got to connect the dots, because if you look at the markets, the global markets, right, and we're like, I always sort of go straight to the US bond yields, right? A reflection of interest rates in the States. It's down like zero point 0.1, something like that, right? But it is down slightly. But so that's not really the answer we're looking for. We're trying to work out what's going on. I tell you what, check out the commodities, right? Aussie, Kiwi, and CAD are the commodity currencies, okay, rich in these resources. And the commodities have gone through the roof. Now, you can sort of connect a few extra dots. And I wasn't sort of looking at this myself or even considering it, but I will next time. This is what generally can happen, the impact of the Chinese numbers, right? Now, there are large tariffs. It may take 3 to 6 months before these tariffs really impact, but industrial output 5.9%, okay, on the high side of expectations. Retail sales were up and urban investment up, right? This is one of the things, right? You think about the Chinese numbers, are they made up? Whatever it might be. But the situation is there's still growth here, right? And that means commodities go up. It's probably the first good news that commodities have had. We see the commodities go up as a group, and obviously the commodity currencies. Okay, US retail sales a little bit softer than the zero point 0.6 expected. The Philly Fed manufacturing number there too, well, not the Philly Fed, the New York Fed manufacturing number, like pretty much a lot lower, right? And then you go ex autos as expected. So to me, the US numbers weren't great, right? The retail sales numbers, and it did give the currencies a little bit of a slightly weaker tone. Now, dollar yen is out of the game, right? It's like trading to its own drum, beat of its own drum, I should say. The dollar CAD, Aussie and Kiwi now, we can be watching the commodity prices here to work out where the next leg of direction is. I'm starting to sense a big move on the dollar is building. It might come from the Fed. Now, if I just click over here to the daily charts, right, you can see the dollar index sort of breaking down. Dollar Swiss, it's right there, sort of at that bull bear pivot line, wants to go. Momentum doesn't suit the long term at the moment, but you know what? Weaker numbers. Be prepared for the next move is where I'm sort of coming from. And even dollar yen, right? You look at the hourly charts, it's sort of breaking higher, but you know what? This thing's just coming back to levels to get short again. And the dollar is starting to go down. You got dollar CAD right on a support trend line there. And you've got Aussie just tweaking higher, as is the Kiwi. Now, these currencies have got an easy 5 cents to the top side, right? That's how far they've come off, especially around the tariff scenario. Sterling, well, we've seen a nice clean break of the bull bear pivot line there. It's heading up obviously to 130 the figure. And we've got euro there as well with a resistance line not too far away. Excuse me. So like on the long-term perspective, I can't help but think the dollar is turning here, right? It's turning over. You look at the short-term charts and you can get a little bit sort of caught up with the numbers, but we are seeing this as well, right? Especially the commodity currencies, which have been so depressed, compressed, whatever you want to call it. They have been pushed down with the whole tariffs on China. It's a bit of a while before they impact at the moment. There was actually a study yesterday done in Australia saying the tariffs on steel is not going to be, excuse me, not going to be a big thing. All right, so that's where we are, right? So I'm looking now, starting to really focus on a sort of weak dollar perspective. And if I just come back to the live trade hub, right now, US yields were sort of, and they were a fraction off, but not enough for really to me to say they were down. But the dollar index is lower. US equities are up. It gives us a risk on profile, right? That's sort of what we're looking for. And when we're talking risk on, back in the global financial crisis, 08, 09, around there, when the media started using this term, it was the risk currencies that were the ones that were sort of bagged up in this, right? So yeah, risk on, the dollar's off, equities are up, but definitely Aussie, Kiwi, and CAD were up, right? They are the risk instruments. So just be aware of that as as you look at the market. Now, currencies in the zone very quickly. We've got euro, sterling bullish, dollar Swiss bearish. We're waiting. They're not at optimum levels at this point. We've got the ZEW German data out today, like very good consumer sentiment numbers. And then we've got industrial production numbers there out of the US, which could give us, you know what, all these little tiny US numbers could give us the next leg of direction. I'll come into the Aussie data when we get to it in the next couple of days. You come back to prime time analysis. This is where you can sort of really fine tune your, especially the direction on the various instruments, right? This is where I'm sort of saying euro, it's going up short term, long term. Same with sterling. And then you've got the dollar index and dollar Swiss doing the same thing. Whereas, you know what, the Aussie and Kiwi, they've just got a bit of a bit more work to do to get that long-term direction up. Okay, it doesn't mean we don't have opportunities to trade them, but at the moment they are not prime time as far as direction. When we've got direction, it makes it easier for us to work on the trade, whether it's an economic data release that comes out that goes with that direction, or whether we wait for the timing to sort of fit in perfectly with the overall move, right? Takes a little bit of patience. Just wait for the opportunities, right? So, you know what? If momentum doesn't line up, the first thing to be looking for is, okay, what economic numbers have we got coming out that could work for me, right? Now, the economic sentiment, current conditions, you're looking for stronger numbers there, right? Because that goes with a stronger euro. And then with the, say the housing starts or the industrial production numbers out of the US, weaker numbers, right? The dollar's already sort of tweaking lower. Now we've got the CAD inflation numbers here. This could be it's a bit of a tricky one, right? Because when we look at the CAD, right, you've got a bunch of different variables, right? At the moment, it's sort of this is starting to look a little bit easier. Okay, now why am I saying that? Oil is rallying, right? Now I know that arrow goes down. That's because on my y-axis here, x-axis, the price is going up, right? So I've inverted the oil price to go with dollar CAD because it's quoted as US dollar CAD, right? So you got to invert one or the other. I've inverted oil. What we've got is commodity prices going up, oil going up, right? That means a stronger CAD pushes dollar CAD down, right? So that's where we are with the whole number, right? So what do we need there with the Canadian CPI number? Well, if we get a stronger Canadian CPI number, that can lead us into a downside move there. Okay. Now, so that's something to sort of look at. There's so many different variables. If you've got US numbers coming out at the same time, dollar CAD can often be the one currency pair because it's so influenced by oil that it can discombobulate very quickly, right? So we'll see how it is. It's massively oversold at the moment. So I wouldn't be sort of getting into the market. And that's the same, right, for the commodity currencies at the moment because they've had a big day, right? Aussies massively overbought, Kiwis massively overbought, and dollar CAD's massively oversold, right? So does that mean we get into these markets? I wouldn't be buying Aussie, Kiwi or selling Aussie, Kiwi, buying dollar CAD at these levels because it's just there. It's been too stretched. Give it some time to either retrace or come back. We've got a resistance, a support line there in dollar CAD that could come into play. that's something you might want to have a look at as you go through the course of the next 24 hours. Right, live sessions, just to give you a bit of an update. We do have a coaching session tomorrow. I'm still sort of having a look. I'll go through the questions from some of our traders and highlight the ones that I think would be most beneficial for everyone. Doesn't mean you can't join the meeting and ask a question and get the ball rolling there. And the next live session is not till Thursday, right? So we'll see how that plays out. But dollar CAD today, I think it's one of those ones where I think the ducks line up, right? And what I say by that is we've got enough things working for us at the moment, right? Oil, as I said, is moving in the right direction. What I would be looking at very closely when it comes time for the release is the commodities, right? Obviously, oil is part of that. So if the commodities continue to rally, Aussie, Kiwi, and CAD will rally, right? They've got lots of this stuff on the ground. So if it goes up, the commodities go up, well, they're going to make more money, and that's good for their economies, and that's good for the value of the currency, right? So that's the general principle. Yeah, and that's sort of where we are, guys. It's a bit of a balance. Start of the week, 10-week challenge is on. Now, don't let the time frame of the 10 weeks sort of get to you, because I've already spoken to a couple of guys and they're like, oh, I haven't got anything happening yet. Well, nothing's happened in the market yet, really. Okay. I know we had US retail sales out, but it wasn't, like, yeah, let's rip into this. We've got some levels here to work with, short term and long term. The trades will come when they come. I tell you what, one of the sleepers, which just is sitting there at the moment, long term, dollar yen, right? I still like the idea of dollar yen back down towards 130. And that's something I'll be looking at as I go forward. Dollar yen is one of those things when it'll give you cash and then just sort of go to sleep. Give you cash, go to sleep. So just understand the profile of some of these instruments. I know a lot of you haven't had a lot of experience with this. I've been doing trading for 35 years, and the yen is the beast. But when it gets in a frame of mind, you can see very clearly here it's sort of going down on the long-term charts. It can just keep giving you cash, right? But we just got to make sure we get in at the right levels, and hopefully the BOJ stay out of it. All right. Anyway, that's enough from me. So there's a bit going on. We've got moves building. We've got commodity currencies on the move with the commodity currencies. So make sure if you have got Metastock that you are looking at these things, keep an eye on the risk on, risk off pairs. But for me, commodities, you've got to just keep an eye on it, right? Because if they turn around, Aussie, Kiwi are going to get sold off and dollar CAD will go back up, right? We'll see how it plays out. All right, guys, have a good one. All the best. Cheerio.